The October CPI report just came out with numbers that shocked Wall Street.
Hi, good morning. Yes, October read on our consumer price index. Month over month headline expected up 1/10 comes in at 0, unchanged 0. And this is a biggie. We haven't been under 4% since May of 2021. Yes, so this number is being taken as a good sign, and I understand why.
We're going to take a look at the full October Consumer Price Index summary, but for now, here's the highlights you need to know. The Federal Reserve has been in a battle with inflation for almost 2 years now, and this report potentially signifies a major victory. The Consumer Price Index was flat in October compared to the previous month, signifying no overall price increases. From a year ago, CPI came in overall 3.2% higher, but that was significantly lower than Wall Street expectations. And as far as why the stock market is surging today, well, it's because this inflation report came in lower than expected, and this could potentially signify the Federal Reserve's fight against inflation could be coming to an end. If this is in fact a continuing trend where we see inflation continuing to cool off, that could mean that the Federal Reserve does not have to further increase interest rates, and these interest rates put significant downward pressure on public equities or the stock market. Let's dive into the actual Consumer Price Index summary for October, and this is going to show us category by category what is going up in price and what is coming down in price. Food prices are still going up, on average 3.3% higher from last year, but take a look at this. If you go to the grocery store, you're only paying 2.1% more versus a year ago. It's the going out to eat that's really bringing up this whole category at 5.4% more expensive versus last year. And that makes sense because buying food at a restaurant is going to have tons of other costs like the workers, the materials, and then all of the utility costs for that restaurant, etc., etc. Now, energy is a volatile category, so it is often pulled out for various statistics, but overall, we've seen a 4.5% decrease in energy prices for the category year over year. Gasoline is down 5.3%, but check this out. Fuel oil is down 21.4%. So we're seeing huge crash-like drops in certain energy prices. But that does not mean energy costs are down across the board. In fact, electricity is still higher cost-wise by 2.4% compared to last year. But there is some good news here. If you heat your home using natural gas, that has come down significantly. Utility piped gas is 15.8% cheaper than it was a year ago. Let's hope this trend continues into the winter, as that could mean people are spending less money on heating costs and would have more money to spend on other areas, which could of course bolster the economy. Now, the vehicle market has been a very interesting category over the last few years, and if we take a look here, something interesting is going on. New vehicle prices are only 1.9% higher than a year ago. However, used vehicle prices are down substantially, down 7.1% from the October 2022 levels. It's honestly really good to see this because the used vehicle market was totally disconnected from reality after COVID because tons of people were not looking to sell their homes or sell vehicles for safety reasons. And then all the vehicles for sale shot up in price because there was tons of new money entering the system. And with used vehicles, it's often lower income individuals buying them. So it's always too bad to be seeing people with very little money ending up being the ones getting scammed on these crazy used vehicle prices. But that is hopefully a thing of the past now. I guess if you're in the used car business, you're not going to want to keep a lot of inventory on your lot. I mean, 7.1% is a substantial drop in prices. Now, one thing that's interesting to see is that apparel is up 4.7%, outpacing the overall average for the CPI, showing us that despite these higher credit card interest rates that are coming along with the higher federal funds rate, consumers are still out there spending money. Now, shelter is unfortunately still remaining high, 6.7% higher than it was in October of last year, and this is also the biggest cost out there for most people. So a 6.7% increase in your single largest expense rates is substantial. And finally, another category that's been bringing things up is the transportation services that is 9.2% higher than it was a year ago. So overall, what can we gather from this report? Well, first of all, we know the stock market is celebrating this for many reasons. One of them is that if prices of things in general are coming in cheaper than they were expected, that means people would have more buying power than expected, and they may do more spending on other categories. For example, if you're not dumping a ton of money into heating your home, maybe you're going to go out to dinner once a week instead. The other major positive catalyst here for the stock market is this potential for this being the end of this tightening cycle where rates have been increased so aggressively. If inflation continues to trend in this direction, it is possible that rates may just have to remain at this level until inflation comes down to that 2% target, and perhaps further rate hikes are not necessary from this point. But overall, it's still too soon to tell if we've won the war here on inflation, as it tends to be rather sticky and cyclical in nature. What that means is you'll often see it coming back in waves after it starts. We're really going to have to look back after a few years go by to truly tell if we have stamped out this inflation. For me personally, I'm preparing myself for these higher interest rates at, say, 5 to 6% becoming the norm and not so much this being the abnormal. We've all been used to an artificially low interest rate environment, and all that's really happened here is us returning to the historical average of what our interest rates have been over many, many decades. I don't think it's wise to be sitting there thinking that the Federal Reserve is just going to pull the rates back down to zero out of nowhere. I think that is something that is largely a thing of the past. Hopefully anyway, because a lot of that is what led to the situation that we are in today, where we're having to face this pain in order to stamp out this inflation. My favorite asset right now is good old-fashioned cash. You can plop your money into high-yield savings and earn about a 5% APY risk-free. You do not need to take on risk right now in order to earn a return that outpaces inflation. I do plan on doing this every single month here, covering the Consumer Price Index report. So if you enjoyed this, make sure you subscribe and hit the bell. So let me know if you personally think inflation is cooling off and whether or not you're seeing higher or lower prices in your local area. If you're looking to protect yourself from inflation, one of the best options that you have is just earning more money. So if you're looking to learn how to do that, make sure you grab a copy of my book, From Side Hustle to Main Hustle to Millionaire, which is all about creating your own secondary income stream. This book walks you through everything from earning your very first $100 to growing your first 100 fans on social media, as these days every small business should become a social media brand too. You can grab a copy of this book at most Barnes & Noble locations. It's also available at libraries across the United States. You can find it on Amazon, as well as an author-narrated version on Audible. Thanks so much for tuning in. Click below to watch my video about the electric vehicle bubble and how EVs are piling up at dealerships, and I'll see you there.